If you're a startup and you look at ASEAN as one region, it's actually not that easy. It's not one region. You are dealing with a lot of different languages, you're dealing with different cultures, you're dealing maybe with different family conglomerates across these ASEAN markets, and players are just very different. So I think it's not such a straightforward process to expand. There's no really one-size-fits-all playbook that works because the offerings are also very different and circumstances are different, competition is different. So I don't really believe in having one playbook, but I really believe in powerful collaborations and working with trusted partners.
You have just heard from Jonas Thürig, the head of the F10 FinTech Incubator and Accelerator in Singapore. F10 has the mission to unite tech startups with big business to shape the future in banking and insurance. Previously, Jonas worked at the Embassy of Switzerland in China as the deputy head of the Science, Technology, Education, and Innovation section. Our conversation will cover Singapore, the broader ASEAN context, and some comparisons to China. So let us dive right in.
Good morning, Jonas. Welcome to the show.
Morning, Norbert. Great to meet you.
It's been a while. We met at the Singapore FinTech Festival, and so you've been very busy with your most recent batch. So maybe we start there. What were your takeaways from that batch and the highlights, maybe also some of the companies that were participating?
Yeah, sure. What has stood out, of course, is that we started the batch in August, and of course, the whole environment has not been overly enthusiastic and friendly towards these early stage startups, especially in terms of funding, of course. So I think on the one hand, there were really challenges that the startups faced. It wasn't that easy for them to just get in touch with VCs as they stood on the brake and took it a bit slow. So from that perspective, maybe a bit more challenging for the startups from this batch. But on the other hand, what I really appreciated very much was being together as a batch, as a group, especially in difficult times. That can be extremely helpful. And I saw it again now over the past 4 months that they went through the program. They really bonded well and supported each other. It's really interesting to see how they can work together. From that perspective, it was a challenging environment, but we had a great batch that worked very closely together. And maybe just to mention a few of the startups that we're working on, some exciting ideas. One is called Rocket Capital. They are a crowdsourced crypto hedge fund. They have 3,000 data scientists that on a weekly basis predict where the crypto market is going over the next 7 days. They then upload those predictions. They don't upload the models, they just upload the predictions. And after the 7 days, those data scientists get rewarded that have the best predictions. Over time, they managed to build a meta model on top of that, where they took the top 20% of predictors and data scientists, and they built the model themselves and then invested according to that model. It's extremely innovative. It's actually a solution that exists already with equities, but these guys do it with crypto and they fully decentralize it, and you get paid in tokens as rewards. So yeah, they really tried to revolutionize in a way investing, and they had a very good performance over the last 8 months, despite a very difficult market condition. That really shows that decentralized intelligence can work really well. So that's an exciting one, of course, very futuristic and experimental in a way. And then on the other hand, we had TEORRA. TEORRA is a B2B marketplace for sustainable goods sourcing. These companies that are buying sourcing material, whether it's for their own production or bags, or they can do that on TEORRA. It's a marketplace here. They're very rigid with their suppliers, making sure that they follow all these standards. And of course, it's great timing right now. It's a big topic. And they've been doing really well just since they started a couple of months ago. So that's another exciting startup that we've been working with.
So I don't necessarily want to go down the crypto rabbit hole with you, but clearly, given the overall environment in that space, and decentralization is great, but the second question that comes up then is immediately regulation, especially with the centralized exchanges that's been going belly up, or the centralized lenders as well. So how does that work in the context of Rocket Capital?
Yeah, so actually they are a licensed, they're regulated, fully regulated hedge fund in Singapore. They need to adhere to all the rules here. So that's great in that way. They are regulated. They follow the rules. Hence, I think That's what I'm right now seeing. I'm either seeing fully regulated entities or then really fully decentralized entities. The goal of Rocket Capital is actually the vision is to be a DAO at the end of the day and to really be fully decentralized. But until this is really fully feasible, there will be a fully regulated entity here in Singapore.
So technology is decentralized, but the operating model, they have a MAS registration and you can actually find them in office at a specific location.
Exactly. In terms of technology, certain parts are fully decentralized for Rocket Capital and certain parts are not yet fully decentralized, just because technology sometimes is not yet really there. It still needs some time until they can really fully decentralize, and without incurring a lot of costs, there will still need to be certain things need to be built before they can fully decentralize.
Excellent. Also interesting to hear from the Singapore ecosystem in that regard, because in certain crypto things they've been hesitant. Others, like this Rocket Capital thing, seems to be something that you might not find in other jurisdictions like Japan, for example. Very interesting from that perspective. But like the two examples that you picked are also fascinating. That leads me to the square one question. What does F10 do and how you position yourself? And so these are two totally different industries. What is your focus? And you also said early stage companies. So it's early stage companies, but what sectors, what is of interest, and how do you go about selecting the startups that you ultimately support?
Exactly. So maybe just to give a bit of background, we started out in Switzerland in 2015 as an initiative to foster a fintech ecosystem in Switzerland and also foster innovation by collaborating with startups. So we had 6 Swiss Stock Exchange being a founding member, Bank Julius Baer being a founding member, and also PwC Switzerland that came together. And since our beginning, we grew to more than a dozen partners in Switzerland, really being the market leader. And we realized, hey, if we want to expand, we need to go geographically further. And we always struggled to attract startups from, for example, from Asia. So we picked Singapore as our hub here. In Europe, we also expanded to Spain as well as to the Nordics. We're also in Sweden and in Madrid. So now in the last 7 years, we incubated and accelerated more than 250 startups. We have 2 different programs. On the one hand, we have our flagship program, which is an incubation program, early stage program, as I just mentioned. We are very much fintech focused, right? But in that vertical, we're still quite broad. And we really look at exciting startups with scalable solutions because we do invest into these startups. We just also raised a new fund this year that we start deploying from next March onwards, where we put 50,000 USD into each startup that joins the cohort. And then we have the option to further double down $200,000 to $300,000 into the startups that manage to get a lead investor and raise. So of course, here in this early stage program, we really look at what are the promising startups that can become very big, unicorns, hopefully. And on the other hand, we work very closely with our corporate partners, how it all started. And for our corporate partners, we are more looking at problem statements that they provide to us. And with those, we then go out, scout for startups. And these are usually more later stage startups. These are maybe Series A startups, seed startups that have already a working product and they really want to work with corporate. And that's how we facilitate that collaboration. So we really have the two arms. We are on the one hand, the VC incubator. On the other hand, we are the corporate innovation arm.
And so as a precondition to take part in the program, at least going forward, that means also the equity component versus the 50,000 K investment.
Yeah, exactly. So we take 2.5% for 50,000 USD with this first investment at the beginning of the program, and after the program, we would invest via convertible.
Understood. For your personal journey, you were in China before you went to Singapore, right?
Yeah, I was in China before, but not with F10 actually. So my personal journey with F10 actually starts at a startup in Switzerland for 5 years. It didn't work out at the end, and I joined the stock exchange in Zurich 6 Group. And that was exactly at the time when F10 started. And of course, me being an ex-founder, I loved it. And I was there 2 times, but I was always really looking to work in Asia. So after my MBA, I had an opportunity to join the Swiss Embassy in a special role in the Science, Technology, Education, and Innovation section. So I went to China. We brought a lot of Swiss startups over to China for roadshows, meeting investors, meeting potential customers. I did that for 2 years, then realized I really like the private sector. I wanted to do a transition, and that was exactly the moment when F10 expanded to Asia. I called Andy up, who was the CEO of F10, and eventually got the job and then moved down to Singapore in February 2020, right on time before it all locked down. I'm bringing now the startup experience together with operating a platform as an embassy as well. And I also have that financial services background from my time at the exchange.
Sometimes when you're in the private sector and you look how the public sector is throwing around money in all the different programs, you see it in all markets. And it's not like them saying that they're doing a bad job at all, but clearly there is pretty good funding, it seems like, for any of the embassies in the major markets to do the bi-directional matching, bringing home country startups into the foreign lands, but also then looking for foreign direct investment. The private sector maybe has to fight a bit harder for the positioning and with the corporate partners to keep them happy. So I found it interesting you said your attraction was back to the private sector. I think your Swiss colleagues here across the region are doing a very good job in connecting the ecosystems, let's put it this way.
What I was missing at working in the public sector is your immediate impact. You can connect a lot, which obviously I enjoyed. You meet a lot of people, but you don't really get to directly work with these ventures. And that's something I really enjoy right now. Again, I'm really being very close to them, being able to invest and bring them to that next level. That's just something that wasn't really possible if you're within the public sector. But you're right, in terms of funding, I find it, Switzerland is not as attractive as what I've seen now in China, as well as in Singapore, as well as in Korea, where we are also been running some programs. It's incredible the amount of grants and government funding that you can get if you want. I think only time will tell how successful these programs are, but certainly it's a whole industry that has evolved around it. Japan is also now on this trajectory to invest a lot of money. You might be able to talk about that.
I always have my doubts because paper is patient, and I think the Japanese government is very good with making plans and pronouncements, but the execution is somewhat lacking. And you just have to look at recent history. It's a 5-year plan and want to create 100 unicorns. And you're just looking at different data that comes from all the Bains and McKinseys and all the accelerators. Even if you have startup valued at $100 million, an average, if they make it, it takes 4 years to become a unicorn. So we have a 5-year plan. You can work backwards. I think it's a very ambitious plan. It's great to put it out there. I don't think it's very realistic, and I don't trust much in the execution based on recent history or the last 20 years, let's say.
Yeah, and money is only one component, right?
Yeah, and it will spin up a whole industry, as you said. There's already a decent amount of accelerators and startup groupings, and the competition between Tokyo, Osaka, Fukuoka, and others, that will only get even more intense. But basic infrastructure isn't quite there, and you try to pour lots of money into it. Dangerous.
Yeah. And maybe one observation I'm also seeing here in Singapore, and I think that's what we see also from Silicon Valley, for example, is actually, even though there are a lot of startups, for example, in Singapore, many of them have founders from overseas, right? So the immigration policy seems to be a critical factor as well. Is that also somehow included in these policies in Japan? Because immigration has been rather low in Japan, right?
Yes, it has been. There's like entrepreneur visa, founders visa or so that originally was ridiculously short. It was 6 months. And at some point it doubled that. As part of this 5-year plan, it actually gets extended further to 3 years, which makes the whole thing much more realistic. Sometimes in 6 months, you're not even able to get a bank account opened in this country. And so also in your experience, the comparison of China and Singapore, and maybe some things you alluded to in terms of the foreign founders as well. But they almost seem like at diametrically opposed ends, where you see like China is this huge domestic market, and maybe it's hard to get in as a foreign founder as well. In Singapore, comparatively tiny market, but then as a springboard for the whole region. What else is there from your on-the-ground experience that you would highlight?
These are the two biggest differentiators, right? That we really, every startup that starts in Singapore is really here. This is just the starting ground. But if you really want to grow and you want to become a unicorn, you will need to geographically expand. I think what's also different here is if you're a startup and you look at ASEAN as one region, it's actually not that easy. It's not one region. You are dealing with a lot of different languages. You're dealing with different cultures. You're dealing maybe with different family conglomerates across these ASEAN markets, and players are just very different. So I think it's not such a straightforward process to expand. So you really need to pick your battles. Whereas in China, you have one language, you need to expand. You can expand across the whole country. Although one thing I really learned is it's actually also fragmented within China. So especially if you're talking about players, with whom do you want to partner up? For example, if Beijing extremely well and you go to Shanghai, it can be very different because there will be very different players. You need to, maybe regulation even is different, as they have all these different test grounds with new technologies, and it applies maybe somewhere and doesn't apply somewhere else. But overall, I guess expanding across China is a much more straightforward process than expanding across ASEAN. It's not that easy. And then, of course, also, I think the average consumer spending in Southeast Asia is definitely lacking behind that of China. So you really need to also think about, is it feasible to expand and acquire customers at a certain cost? Will that ever result in a return on investment? Especially if you start in Singapore, the metrics look great because average income is rather high here. Then you go to Indonesia, is a totally different game. Yeah, I think a very fragmented market across Southeast Asia, different languages, different regulation, different players. Whereas China is, of course, much more homogeneous, but also brutal, I think, in terms of competitiveness. It's a beast. And if you want to enter the Chinese market, be ready and know what you're doing. I think it's probably not the first market. Like having that seen from bringing Swiss startups over, unless they have a clearly differentiated product with a very strong IP and a team member that has China experience, is probably very tough. Or they have to find a very strong local partner. There's probably no way around that.
So when you look at ASEAN and looking at your platform, what are some of the things that you're doing in terms of helping the startups as part of your ecosystem to branch out from Singapore? Is there a cookbook where you say you start in Singapore and these are the order you take the countries, or what's the secret sauce to be successful ultimately in branching out in ASEAN?
Great question. I mean, the way we differentiate ourselves from other accelerators, and as you mentioned, there are many more, right? We have a very clear focus, a fintech vertical focus, and that's where we build our entire network around. So first, of course, our corporate partners, being financial institutions, for example, we are also working here with Franklin Templeton and others. These are obviously ideal partners if they have an offering that is interesting for them to partner up and then maybe do a go-to-market together. And then on the other hand, we have a very strong mentor network. So these are subject matter experts from financial institutions or ex-founders or people maybe from across the region with a strong network that can help you with your go-to-market, link you up with trusted potential partners across the region. So that's really what we're trying to do, really build that very meaningful ecosystem for the fintech space where you can find these partners. And then across the region, we are also working with scouts. So these scouts, on the one hand, help us to identify startups that we can get into the program. But on the other hand, they are also our kind of trusted partners that can help our startups here if they want to expand into that market. There's no really one-size-fits-all playbook that works because the offerings are also very different and circumstances are different, competition is different. So I don't really believe in having one playbook, but I really believe in powerful collaborations and working with trusted partners.
When you look into 23, kind of we're still in this difficult environment, it probably will continue for a while because it just changes fundamentally from the last 10 or 15 years from the global financial crisis. I think it's obviously the first time that we see higher interest rates and some turbulence in the capital markets. What do you see as the hot topics for founders to focus on right now? Something that's sustainable 3-4 years from now once you scaled a bit. What are you looking for the future, the hot idea?
I think in Southeast Asia, there's still so much room for financial services. I think we're still very early. So I think embedded finance as a topic will continue to do extremely well. Alternative finance, like lending, right? There are just huge population of underbanked, unbanked, underinsured, uninsured. So actually InsurTech's direct-to-consumer solutions, I think they continue to grow incredibly fast. And then, of course, also, for example, it seems like valuations have been quite rich already. So I think there have been a lot of attention, for example, for Indonesia. Vietnam in the crypto space has at least done really well. Let's see how things develop next year. But what I'm also seeing is that there's now that next tier of countries that will implementing solutions. So Bangladesh, Pakistan being countries that I suddenly hear some of our VC friends going to and seeing obviously very attractive terms from a VC perspective. So I think it's a trickle-down development that you see across the region where maybe some countries are already quite rich in terms of valuation, whereas others have a lot of room to catch up. And they all kind of start with payment, remittance, lending, embedded finance. So I think that will continue to be growing incredibly fast, direct to consumer, InsurTech, for example. On the other hand, of course, sustainable finance, I think it's also a big topic here. Although the awareness of the consumer is one of the areas that it's still not very much demand driven, it's more pushed by governments, which I think is probably the right thing to do. Over time, and the new generation that is much more aware of the issues, this will continue to flourish also and grow rapidly here in Southeast Asia. So we, of course, also focused on that. And of course, we have a lot of, for example, in the area of carbon credits, where you have these rainforests just across in Indonesia or Malaysia. There are startups out there that, for example, use satellite data to also make sure that the forests where they sold these carbon credits for the next 10 years remains there as a forest and doesn't become suddenly a monoculture planted. So there are exciting tech startups out there using big data, satellite data to ensure that this promise will be held, and building on that topic of sustainable finance. And then awareness, we have a startup, Doconomy, that we also invested in from Sweden. They're expanding here with their credit cards and working with banks where they tell you about your consumption and what's the environmental impact of that. I think these kind of solutions will really help with the awareness of consumers and will drive consumer demands for such products. And then, of course, I believe we have a big catch up also in terms of not just the E, right? Also the governance, for example, is a big topic, which is, in my opinion, much more difficult. Probably you cannot just have a satellite that will check whether the rainforest is still there. You need different solutions to ensure that governance is right and labor laws, etc., are adhered. Also in that area will be a lot of developments.
Sustainability, fictitious question, but is that essentially a first world problem? And so something that's of interest in Singapore because it's such a higher earning country. But when you go to Indonesia, the problem is much more, well, bank the unbanked and provide basic services. And people really don't think about that sustainability thing because you need to feed your family first.
I think it's in that sense early in these places, but also I think over time that new generation will be aware, hey, I want to have a clean ocean, or it's getting really hot here. It was not that hot in the past, droughts, things like that. I think it has a lot to do with awareness building, and fintechs can play a part in that role.
We've seen quite a breadth of ESG branded startups at the Singapore FinTech Festival, and some of them were more of the reporting type, where we put Doconomy, and some others were more supply chain focused, right, embedded in the whole supply chain to show traceability and origin and so on. TEORRA, which you mentioned earlier, I would put into that category as well. And clearly, if we don't measure it, we can't manage it. That's the argument for all the reporting. But on the other hand, we need to do something. We're running out of time. And so what are real things that people action on rather than just report on? My personal interest would be more in what are the folks that are actually making a change in the environment. That's probably feels for me more on the supply chain side.
Yeah, I agree. As a government, they also have this green initiative where they collect, for example, data from SMEs, real-time data. Of course, it's not really real-time, but basically making the data available is the first step, so that you can act upon that data that you see in terms of, do you now invest into this company or not? If you don't have the data and you just maybe have a nicely written report without any real tangible information, it's very hard to make that judgment. And also, they may claim that they do and will do certain initiatives, but who's actually following up on them? So I think the government here is trying to put a system in place that allows the data collection on an ongoing basis, which I think is a very important starting point for then later on taking decision on, for example, investment decisions, whether you'll invest into such a company or not. And I think it's just very clear. For example, if they are applying for loans as an SME here, you apply for loans and you have a good track record in terms of ESG by the information that you provide, you get maybe a better credit, pay less interest on that loan that you take out. The regulator do play an important role here to incentivize these companies correctly in order to drive that change. Because right now, I still believe investing into sustainable solutions isn't always the most attractive investment decision in terms of return. So I think we do need both. We also need that government setting the right incentives to drive that transformation.
Was that the ESG data bank?
Yeah, exactly. Yeah.
Saw that during the Singapore FinTech. I totally agree. I think I found this really amazing, and maybe that's a matter of scale that the country like Singapore can pull that off, and they should, in terms of setting an example and providing this as a public utility or centralized utility, at the very least, common data access, because otherwise getting this data together in a harmonized format seems hard. And if you make it a private sector competition, you probably end up with the split ecosystem where you've got 3 or 4 different vendors. And the question is, how do you integrate that data across? I think in terms of laying the foundation for the industry, splendid initiative, and I think very well done for Singapore.
I think so too. They're really also trying to be a role model here for the region, and they can because they're rather small compared to other countries.
So when you look at your cohort and the flow that you generate, how do you segregate it? And thinking about, say, your home base is Europe, Switzerland, and so what percentage of your activity in Singapore is driven by European startups coming to Asia and using Singapore as a base like you do, and how much of that is already locally either native to Singapore, or where you have, let's say, ASEAN startups that come into your accelerator and use it to branch out in the region?
For now, 95% is regional, and we work with the startups from the region entering Singapore and expanding from here. The beauty of our model is that with the different hubs that we have is that once they are in the scale-up phase, they can then go over to Europe, for example, enter those markets. In the case of TEORRA, for example, they're looking at the Nordics because the Nordics is like sustainability, sustainable sourcing is probably a very advanced market there and a lot of interest from companies. So we connect them with the guys in Sweden and helping them to connect and exploring the market entrance. After the incubation program, once they become a scale-up, we really will be helping them to also enter these new markets. And now, for example, from B2B fintechs in the wealth management space from Switzerland, it's a great market here because it's also wealth management and wealth management hub with very similar challenges. So it makes a lot of sense for those to expand to a hub like Singapore. So from that perspective, that's really the story that we are trying to further foster and link the hubs up between each other and help our start expand.
That's amazing compliment. You're still relatively new on the ground and having 90% sourced locally, regionally. That means you've created a pretty impressive, comprehensive ecosystem in that very short time frame. So well done.
Thank you. Yeah, sometimes on almost weekly basis, I have to explain that no, I am actually in Singapore. Our program is here because I look and sound very Swiss, right? But I've been living now in Asia for 6 years. This is what we do.
So maybe to round it out with a call for action. When is your next cohort? Is it still early enough to apply for startups if they listen to this?
Our next cohort starts in March. Last entrances still welcome. The best is direct message me maybe on LinkedIn if you feel like this could be something for you. We'll kick it off the program in mid-March, but we do a selection in January already. So please reach out. And then for the Franklin Templeton program, for example, the other programs that we run in Franklin Templeton, we are receiving and open to applications on an ongoing basis. You can just always upload your application.
You're running the accelerator for Clayton as well, right?
That's the Web3 focus program as well. Not yet fixed when we run the next one. But yeah, all the Web3 startups also very much welcome to reach out.
Lots going on. Clearly, you've got the plate full already for 23 then.
Yeah, pretty much.
Wonderful. Great conversation. Thank you very much, Jonas, and wishing you all the best for next year.
Same to you.